Hi, this is Kerry Artak with Wicked Stocks, bringing you your daily Tesla report for Monday, March 20th, 2023. Please click like if you would, if you haven't already. It does help us out a great deal in being found on YouTube. Also, become a Wicked Stocks, YouTube subscriber. You'll be provided notification each and every time new content has been uploaded to our Wicked Stocks YouTube channel. And check out wickedstocks.com, where we offer a full assortment of daily and weekly video analysis, daily analysis in the Triple Q, the SPY as well, the Daily SPY Report, the Daily Triple Q. We offer 2 individual stock picks every week in the order of a 5 to 10 minute video every single week that you never see on YouTube. We also do weekly analysis in the S&P 500 index, the NASDAQ 100 index, and the long bond ETF, the TLT. And so there you have it. Check out wickedstocks.com, 5-day money-back guarantee. And let's jump into Tesla. Big picture, working our way into the day itself. The big picture is we're in the confines of this longer-term channel structure with 68, 85, 80, 56 well below the market. We did test this area in early January, came off of it nicely, and in the process, a couple of months ago, settled following positive earnings in Tesla above this intermediate channel structure that is now in the, we'd call the mid-140s, mid-150s. Question is whether we'll see this area or not over the next week or two, or whether we'll continue higher, because continuing higher is still anticipated above this structure. We have a 2 to 3 month buy signal that played out 2 months ago, 1, 2, 3, 4, 5, 6, 7, 8, yes, 8 weeks ago, above this mid-140s, mid-150s support, anticipating the 230s, 240s, now into the 230s. 238.16 is long-term resistance. And if tested over the coming weeks or next couple of months, can absorb buying on a quarterly basis, possibly into later year. And we'll talk a lot about that if we approach it. In the middle of all that, over the last couple of months, we did have a sell signal several weeks ago below this pretty classic channel bottom that is now well above the market at 205.13. We did test our target, which is a rising 2/3 speed line that is now at 172.03 for the day. You can see in the far right, that is a 3-star weekly support, able to contain weekly selling pressures. We may see this early this week. Following that pullback high that was put out last Friday, we closed negative on the day. It wasn't a key reversal high, an engulfing pattern, so to speak. In other words, we didn't push to a new pullback high and then close below Thursday's low. That would have been sort of a done deal, in my opinion, that we would likely today test 172.03. In terms of our downward pivot point today, I still have this a simple channel bottom at 179.05. So you can see in the far right, 179.05 is an intraday containment. It's an intraday pivot point. If we break or open below it, 172.03 is likely, where we can place a weekly low. And from there, rally back, possibly by Friday's close, to 194.09, which is a descending 2/3 speed line. Now, if we do close below 172.03, it does pivot the market south into this zone of support that I showed earlier on the weekly chart, that on the daily chart is 147.07 to 155.48. And so this is a meaningful area that can absorb selling not only through April, but even into Q3. And from here, we can turn higher again as we move into May, June, July trade. Trying to think if there's, let me mention, I don't think I have it labeled yet. So I'll just describe it. If you see on the lower right, I've got 146.06. That is very close to 147.07. 146.06 is nothing more than a downside 5/8 Fibonacci from the January low B to the early February pullback high. And so this is going to be an important test that I would anticipate, if tested over the next few weeks, can absorb selling on a quarterly basis. And once again, I would expect it within a couple of weeks of closing below 172.03. Until then, 172.03 is still aggressive is an aggressive support that can be bought not only for the day, but also for the week itself, the 3 to 5 day swing trade back to 194.09, and also the 2 to 3 week position trade, the near-term investor, speculator. Holding above 172.03, we can, over the next 2 to 3 weeks, push on to 221.25, that long-term 3/8 Fibonacci level we almost tested in early February. So that is those are the different time frames. Hi, if you enjoy watching our daily Tesla report, you'll love our daily Triple Q and SPY reports. They're presented in the same 5 to 10 minute video format. Our daily SPY and Triple Q analysis provides directional market signals that are correlated with highly specific price support and resistance levels. Whether your trading time horizon is short or longer term, we promise you a distinctive edge in your trading of the SPY and Triple Q. We offer a 5-day, no questions asked, money-back guarantee. So go to wickedstocks.com right now and start receiving your daily SPY and daily Triple Q reports today. Now, upside for the day itself, I did have a descending channel top that got pretty sloppy here later this week. And so I'm just sort of leaning on now in terms of our intraday resistance. 184.32 is a 3/8 upside, February high, recent low from a week ago. If we push through 184.44, as you can see here on the far right, then 190.78 is in reach today, and that may be it for the day itself. 190.78 is a 50% upside retracement using the same points early February against the more recent low. And if we close today above 190.78, and that seems to be a stretch right now given what played out on Friday. What I mean by that is Friday was not an excessively bearish day, but we did put out a new pullback high following the low from a week ago, and we closed negative on the day. And so there is room for this market to ease south. And once again, that would be indicated 172.03 if we break or open below 179.05. So in terms of the day trade, breaking or opening below 179.05, signals 172.03, where you can cover the short position if you went short below 179.05, or you can bottom pick 172.03, reverse perhaps, buying 172.03 not only for the day but also the next 3 to 5 days and also the next several weeks into the 220s perhaps. Upside, once again, pushing or opening above 184.44. If you want short, I'd recommend reversing unless you're willing to ride the market up to 190.78 within the day. 190.78 can contain session strength, but once again, I do think 194.09 is in reach this week, holding above the 172.03 speed line. And so once again, closing above 190.78 signals tomorrow, this 194.09 speed line, where we can top out for the week at 194.09. So if you got long here at the speed line, that would have been Monday of last week, and you're holding out for 194.09, that's great. And that's where profits can be taken. And you could, if you're a 3 to 5 day swing trader, go short at 194.09. That might be mean buying, 175 out of the money puts that don't expire for at least, a week or so. Short-term options that expire soon are very inexpensive. They're very alluring for the speculator, and that is one play you could make. If we do close above 194.09, no good reason to be short this market if your time horizon is anywhere from 3 to 5 days to several weeks, because I do think within a couple of weeks of closing above 194.09, 221.25 is in play again. We almost tested it in early February. It could contain weekly buying pressures, and if we were to close above 221.25 over the next few weeks, then that targeted 238.16 long-term channel top is our next 1 to 2 week target. This will be a trouble spot for the market longer term, may contain buying through Q3, and we could fall off from here in a meaningful way. And if settled above, I think would mark a good low for the year, and we could expect continued recovery as we move into later year. Trying to think if there's anything else to really say 8.5 minutes into this video, and I don't think so. We have this former speed line, just so you know, it's just a minor point. Minor points all the way down. Once again, if we close below the 172.03 speed line today, that is a pivot south. So if you're long the market, if you bought 220 calls, let's say, or you long the market for whatever reason, if we close below 172.03, we should, within a week or two, continue south into the mid 140s. And once again, I can show that probably best here. 147.07 dropping daily. And this, so, that's I guess that is the last thing I will say. Closing below 172.03. There's no good reason to be long this market unless you're, a longer term investor, let's say. But if you're, say, a 3 to 5 day swing trader to a 2 to 3 week position trader, it is playing the short side below 172.03. Then expecting, I would say, the mid 140s as a realistic objective where we could bottom out through or into Q3 anyway. And that is really all I've got. Please click like and subscribe and check out wickedstocks.com. You'll love what you see, and I'll talk to you soon.